Hi guys, great to be here, and thank you for attending. So a bit of an introduction. I'm Sid, I work at Coinbase in London, and I lead the blockchain research team. So what does this team actually do? It's actually a very new team within Coinbase that specializes in looking at blockchain data and user flow on chain to determine what's actually happening, how is this space evolving, how are people using dApps and applications, and how do users migrate to different layers and different blockchains. So this is a trend that's been very interesting for us over the past few weeks and months, actually, is this topic of layer ones and layer twos and how are they gaining adoption and what kind of data are we seeing to see how these different layers gain traction. So just to set a bit of context, the kind of base layer that we judge everything by is obviously Ethereum, which is the primary smart contract blockchain today. And if you look at this kind of map that we see here, the way we look at it is, alternative smart contract platforms, we call them kind of L1 blockchains, including Solana, including Terra, Binance Smart Chain, Avalanche, etc. And then on the other side, we have Ethereum scaling solutions, like the roll-up solutions, like Arbitrum and Optimism. And the bottom over here is the application layer, which is currently, historically, it was always built on Ethereum, because that's where the developer stack was, that's where the tooling was. But now, the trend that we're seeing is they're starting to migrate to these different layers, these applications that used to exist only on mainnet Ethereum. And one big trend that we're seeing is not only do these existing applications migrate, there are new applications and use cases coming on different L1s that actually utilize their core strengths and benefits. So this is kind of to just set a bit of context over what we're actually analyzing. So let's dive into the data to see what we're actually looking at here. So this is a measurement that we did. It's a high-level metric called TVL, or Total Value Locked, where it kind of measures the traction that these different L1s are getting. This is a chart of major L1s and how much value has been locked over time in them. And if you see here, some very interesting trends pop out at you right away. So one is the blue, dark blue at the bottom, which is Binance Smart Chain. Obviously had a tremendous growth in popularity earlier this year. A large part of it was because Binance Exchange allowed withdrawals into Binance Smart Chain and had a pretty good integration with them. And so it was a big retail pathway that we saw where retail users were onboarded into Binance Smart Chain. But then if you notice this, right at the start of September over here, you see all the other colors start to really expand all the more and a flattening in the blue. So this is a real trend shift that we've noticed. It's actually happened in the past 4 weeks, which is the proliferation of on-chain bridges, where people who have non-custodial balances on Ethereum mainnet can bridge to these different layers and chains easily and cheaply. So those two factors have really been playing a big role in the adoption of these different alternative layer ones, like Terra, like Solana, and especially like Avalanche, as you see here. So this is major L1s that we're talking about. In addition to L1s, of course, there's also Ethereum scaling solutions, or L2 chains. So they're not quite as big. The numbers are not quite as big here, but it's still a story of growth, especially in recent months. Again, this chart really starts to kick off around September, if you'll notice, with the release of these chains in public and on-chain bridges that allow for easy transfer of money in between these layers. We see a huge spike in Arbitrum at the beginning of September. It was actually due to a meme coin farming project called Nyan Cat that was on Arbitrum at that point in time. So it's a bit of an anomaly, but we're still seeing steady growth. It's almost $1.5 billion locked on these large L2s now, and it remains to be seen how Optimism and other roll-up solutions start to gain adoption as we see. This is a high-level overview. What we've really been fascinated about is what's the user journey over how people actually get on these different layers, especially as Coinbase. As an exchange, we have to onboard retail users to get onto these different layers. And that's a problem we've been thinking about pretty deeply. And right now, there's 2 main paths. You, as a user, can either deposit into a centralized exchange, like Binance or FTX or Coinbase, and then withdraw it into a different layer. Or you can use an on-chain bridge, non-custodial bridge. This is kind of like a simplified view, but it really determines the direction of where this space goes. because what withdrawal mechanisms and what chains centralized exchanges support has a say in where this industry actually goes, where users go, and where traction goes. And finally, the ease of use and the cheap, like how cheap a bridge is, actually has also a big impact on where users go and where capital actually flows. So this is a simplified view, but if we look at a more complicated view, this is actually a full ecosystem picture, a fantastic visual by Dimitri from 1KX, which shows the full complexity of how crazy this ecosystem really is. We have not only different blockchains, layer 1 blockchains at the top, but we also have different sub-ecosystems, almost like mini galaxies within this overall big blockchain ecosystem that we're in now. We won't go into detail into each of these components. We don't have the time to, but you can see at the bottom over here, there's a whole bunch of these different bridges where, the bridge itself is a protocol where you can relay funds seamlessly between layers and transfer it between these different galaxies and different scaling solutions that we see here. So bridges is obviously a big point of importance. So what do we do with bridges? How are bridges used? And we had a fantastic dashboard by Elias. He's also here. You might see him. He's also at Coinbase. Basically, he made a great dashboard which looks at Ethereum-based bridges. So most of the bridges right now are on the Ethereum blockchain, are accessible via users who are on Ethereum. And you can see the list of bridges over there at the legend. And here, the first metric that we looked at is how many actual users are depositing into these bridge contracts. How many people are actually using this? All time, if you look at the metric, all time, this is 190,000 people or addresses have ever used an on-chain bridge on Ethereum. This is a pretty fascinating metric because when you consider it, many people have multiple addresses. So this number actually becomes a lot smaller when you actually think of how many individuals or groups of individuals have actually used a bridge. So overall, we're only talking about, at max, probably 100,000 people in the world who've used an on-chain bridge. So we're still early. Part of my cliche, but we're still very, very early in this whole ecosystem. So that's one key metric. Another key metric is, of course, users speak with their money. How much capital is actually locked in these major Ethereum bridges? There's over 10 billion locked today. That itself is a huge achievement, despite the relatively small number of users. But again, you see here the trend starting in September. It's a fantastic growth in terms of alternative blockchains that are starting to gain traction. This pink at the bottom here was Polygon, fantastic chain, very cheap to transact in, and it's been very popular for the majority of the year. But as soon as September hits and we start to see these easy to use on-chain bridges, especially the bridge of Avalanche, for example, we see a lot of traction in the pink, which is Avalanche, and then also now with Arbitrum, the dark blue over there. And what's been really interesting to see from the on-chain side for us from this perspective is the kind of different communities that form around these different bridges and therefore these different layer 2s. For example, for Arbitrum, it's arguably not a very easy to use bridge. You have to actually bridge, it takes several days to bridge your funds back to mainnet Ethereum, compared to Avalanche, for example, where it's a very easy to use bridge. But we're still seeing similar amounts of usage for both of these bridges, which is pretty fascinating because fundamentally they're different communities, they're different affiliations. People who believe in the roll-up solution technically and ideologically versus people who believe in just a scalable blockchain. So that's been a very interesting thing to note as well. And bridges is like a huge focus for us because we're looking at how are people actually using these bridges. Are they actually using them on a regular basis? An interesting metric, for example, is that 45% of the time after an address bridges to a different layer, they don't bridge back before 7 days pass, which means they're actually involved in interacting with that ecosystem. It's not like a quick mercenary play to get in and out, which is a very fascinating realization. So the ease of use of a bridge and kind of how sticky the network and ecosystem is on the other side has been a huge factor playing a role in how popular these chains are. This is arguably really kicked off with the applications that are on the chain. So this is another big trend that we've noticed, which is basically the applications, the key applications, they're kind of building block applications, come up in every chain, especially with major L1s. These are DEXs, decentralized exchanges, and lending and borrowing platforms. These kind of two holding rocks come up in every L1 blockchain. And one thing you might notice is that all of these none of these are actually native to Ethereum. They're actually native to the L1 that they launched in, which is a very fascinating thing. Even though they're massive Ethereum applications for both of these sectors, Uniswap, SushiSwap, or Compound and Aave, all of these are native applications on the chains, and they've gotten tremendous traction. All of these are number 1 and number 2 in terms of users, in terms of volumes, in terms of TVL on all of these chains. So it's a pretty fascinating thing to realize. And the interesting differences between these is like whether they actually make use of the chain's native features. Obviously, it's a different development lifecycle, for example, to deploy on Solana versus deploying on an EVM-like chain like Avalanche. However, what we've noticed is like the differences in stickiness of how users actually stay and use these applications instead of native Ethereum applications has been a really interesting trend to notice. A great research report, for example, that came out just yesterday measured users who enter yield farms on these different chains. And an interesting statistic is that 42% of users leave a yield farm within 24 hours of entering it, which is a fascinating stat just to think about itself. So this stat compared with the other stat of users not coming back from bridges is a little bit of a contradiction to make sense of, because what are users doing if you're not yield farming on a chain? What are the other activities you can do? Right? This is kind of a question we all have to ask ourselves. Apart from swapping tokens and lending and borrowing and leveraging up on tokens, what else is there to do in crypto today? Of course, there's JPEGs, there's NFTs, there's other use cases that are coming up, but this is actually a key trend that we're trying to monitor is all of these L1s and alternative L2s actually offer feature benefits over Ethereum, faster transactions, cheaper settlement, and more throughput, right? So are there any applications that are coming out that are actually making use of these features to their full extent? We still haven't seen any that have gained mainstream adoption, but we're still keeping our eyes out. So where does this space kind of go from here? This is the questions that we're thinking about every single day. One is, of course, centralized exchange withdrawal support. It really matters which chains and layers centralized exchanges offer for users to withdraw their funds into. We're actively thinking about this ourselves. And then second is novel use cases, like I mentioned, that actually take advantage of these chains' different features so that we can have mainstream user applications that make use of an L1 to its full extent. And then finally, the one big problem we've been seeing is users moving collateral and capital across bridges very fast. So a very interesting statistic, another one, is users of Aave, the main lending and borrowing protocol on Ethereum. We saw a significant percentage, over 25% of addresses that had used Aave on Ethereum also used it on Polygon. And now we're starting to see the trend of it also being used on Avalanche, which is very fascinating, which means that the same users on one chain is being transported to other chains. So it's kind of like an infection of users because they're using the same addresses that they use, because for EVM compatible chains, you have the same address. You usually don't change your address when you bridge across chains. So this has been a fascinating trend to take notice of, but it's still a pain to move funds across. Some of these bridges take a long time to move funds across, and then the other big problem, which is still not solved, I know there are some solutions out there, but is once you have collateral in a chain, how do you borrow against it in another chain to take advantage of an arbitrage opportunity or a yield farming opportunity? It's really tough today, and we see users struggling with this all the time. So this is another big area of improvement and a trend that we're noticing to see how this space kind of evolves. So this is a bit kind of a high-level overview of the trends that we've been noticing. Really look forward to any questions. Thanks.
Thanks, Sid. Awesome presentation. Great intel in what you guys do over at Coinbase each and every day. Maybe we'll open up the floor to any questions that you may have. Gentlemen here, let me pass it right over to you, sir.
Thank you for that brilliant presentation, Sid. So I had a question on what kind of trading strategies have you seen being implemented off the back of on-chain data?
Yeah, that's a great question. There's been many, obviously. Very simple ones include, especially with the proliferation of these layers, arbitrage opportunities on different chains. Sometimes a pair, especially ETH USDC, for example, gets off kilt because there's a little more liquidity or a bad trade executed here or there. And in order for large funds or market makers to bridge funds over, it actually takes time. And unless you have capital, resting capital sitting there on that layer, it's a big pain. So arbitrage is still an open greenfield right now across different layers. Yep.
Are you not seeing solutions in that space? There's a company here in the UK called Credo that look after that type of issue for institutional clients, whereby they don't have to have funds at each of the exchanges, but they would have it at Credo, and Credo looks after the cross-chain liquidity.
Yeah, that's a great example. The thing there is like there's still new L1s coming out live now, which is like scaling with the industry is like the biggest challenge. We've yet to see a kind of big prime broker solution for L1s and L2s at scale today, which is an open greenfield. So let's see.
Well, I'm sure with all the bankers that bought tickets on the last day, I'm sure they're trying to figure that out right now.
Exactly.
For any bankers that are in the audience, you're very welcome. 3 years too late, but still you're very welcome. Anyway, more questions. What else have we got? Anybody? Anyone else knowing about? Gentleman over here, let me get you. You're not a banker, are you?
Hi. What are your thoughts on Cosmos ecosystem? Because in the chart that you presented earlier, there wasn't there, and it's a bit weird not to include it, right?
Yeah. So the charts that I showed are just stats that we can measure accurately.
No. I mean, you showed the list with Avalanche, TerraSwap, Pancake, and there was no Cosmos.
No. I mean, we're still obviously Cosmos, and the Polkadot ecosystem is obviously a big ecosystem as well. The thing is, we're just trying to measure these stats effectively, and one big way of measuring these stats is how much funds actually flow through bridges where we can measure the stats. So that's still a open question and open problem for us internally. One other thing, actually, just to caveat this, the charts that I showed with TVL, it's still a very flawed metric, as we say, because TVL is USD value of assets, and a lot of these assets, the actual core asset appreciates in value against something else, and we're now double counting it because we're counting TVL. So we have to take it with a bit of salt. Totally agree.